Well, I'm happy with the numbers for the quarter. The studio had revenue up 20%. That's what's going to drive the pipeline for the theme parks, for consumer products down the road. People are still watching the movies. On the other hand, there's something for the Bulls, something for the Bears. The biggest negative surprise, I think, was the high cost of launching ESPN+, the digital over-the-top, and Disney's future is digital over-the-top. Obviously, they're launching the Disney over-the-top channel next year. That's why they're buying these Fox assets. So overall, yeah, there's something for the Bears to talk about, but I think it's a net positive and it builds the strategic value of this franchise.
Robert, your first take on these numbers?
Yeah, I mean, I don't think the numbers were quite as bad as they looked on the surface. I mean, if you look at the studios division, looks like a little bit of a miss, but I think the impairment cost on the animated films that they had to take for the films that won't be released was not really expected there. Same thing could be said for parks and resorts, but then you look at the calendar with, Easter not falling in there like it did last year. Also, there's a lot of construction going on. The real big news for the theme parks are the multi-year expansion that they have with Galaxy's Edge Star Wars at Disneyland and out in Orlando next year. Also, 3 cruise ships that'll be coming online 2 years after, I think are really the robust pipeline that investors should be paying attention to. And really, if you look at 2.5% down after hours, that just takes us back to where we were on the 4th of this month. It's had a 15% run up, so I really wouldn't make too much of this. And if you haven't entered the stock here, you're looking for an opportunity, I think this pullback might be it.
Yeah, Mike Santoli highlighted that the stock did have a big run. Did I hear you say during the commercial break there was a LeBron James effect in these numbers?
I got a kick out of the fact that in explaining ESPN's number, advertising revenue suffered for 1 fewer NBA Finals game in this quarter versus a year ago. And of course, the Cavs got swept 4-0. So had they won just 1 game, which they almost had won, if not for a
we might have been talking about Disney flat or positive.
Well, I think it was a small piece of the ESPN numbers. Although I do think it's interesting to ask the question of a lot of the focus on the cable networks is going to go away and be shifted once Fox is incorporated. It's going to be a smaller piece of the pie.